Hi, everyone. Welcome back to the Mortgage Heroes Weekly Podcast. I'm Andy.
I'm Brian.
And I'm Will.
And as you can see, we are in our brand new studio design. I am really excited to have you guys on. Our first show of the brand new year and our new kind of setup. We're trying some new things in 2025 for you guys. It's new for us. It's new for you. So I think that's going to be, I think it's going to be great, though. I'm really excited about this new season.
Me too. Happy New Year's to all of you. Hope you guys all enjoyed your families and this new year. What a start, huh?
Yeah. So I was hoping, like with the,
start.
revealing to everyone, hey, we redesigned our studio. We're doing a brand new look. I thought we'd have like so many positive things to talk about, but we really have to tackle some tough topics today, guys. We just can't avoid them.
Yeah.
And it is going to be a time of this. I mean, already this year is going to be a time where people are really going to be relying on your support and your expertise to really help guide the way, because we're already facing headwinds in 2025, and we really didn't get a choice about it at all.
No, I totally agree. And, first of all, I'd like to start, obviously, we're here in California. My prayers go out to all these families that lost their homes in these fires. It's just been something I've never seen. Being that it's in Hollywood, I thought it was just a movie, But seeing the images is so devastating. I know this is going to be our first topic that we talk about.
Yeah.
And I think it's just so important, especially being a homeowner. And we emphasize strongly of our people being homeowners. I mean, that's how I love my business.
Yeah.
I thrive in home ownership.
And, a lot, and it's all hitting the main stage now, as it were, because of the size of the fires. But, back even in December before Christmas, there was the fires in Malibu, which is right there by my old campus at Pepperdine. And some of that campus got scorched. And so, there've been, people DMing and reaching out to just like, hey, are you okay? And so definitely our thoughts and prayers out to everyone who is really enduring that, because I still have people that I know that have been evacuated that have not returned to their homes yet because of this. So obviously, a lot of potential controversy around all this. I'd like to get through all that and go to what that means for mortgage and real estate. So I'd like to, if we can, just start from the top, and let's just go right to the first article. And this is from Housingwire. So it is going to be housing related. Want to keep it that way. What happens to insurance premiums after the LA wildfires? So at this point, obviously, you all are already seeing what has happened with the LA wildfires. There is going to be a massive outcome from the insurance side when it comes to mortgage and real estate.
Yeah, no, absolutely.
We were already facing headwinds last year with insurance policies and insurers leaving California. This is only destined to make it more difficult.
Yeah, no, absolutely. I mean, right before the fires even started, 3 months prior to, a lot of people got turned down for their insurances. And some people just couldn't even afford those insurances. So they had to drop it. And now we're seeing the situation that we're in. This is just going to make it a lot even more so difficult for Californians to obtain insurance.
Unfortunately, this is one of those situations where we say it's going to get worse before it gets better. I just don't see it another way, and that's not me trying to be pessimistic. It's like it just actually won't get better until it gets worse, and this is about as bad as it's going to get, and there will be backlash for this.
Absolutely.
Yeah, we could definitely anticipate that there's going to be higher premiums. I don't believe they're going to go lower just because of how everybody knew that this was just a matter of time. It wasn't a natural disaster. It's something that could have, been better prepped for. So unfortunately, the insurance companies that do want to insure are going to, take that into account.
Yeah, I mean, you guys, everyone knows, insurance is really, it's all about risk. It's how much risk can you take, how much reward is there financially. And I understand that people who are watching this segment, they're also going to be in the comments saying, hey, listen, these companies make billions and billions of dollars. Well, that may also still be true, but their risk that they're insuring may not cover all the damage that they have based on their reserves for this. And you have a secondary issue, which is the insurance companies that insure the insurance companies. So the reinsurance companies are also going to have a problem on their hand because of the size of this devastation. So, quoted here in the article, you have a guy who's the founder and CEO of the agency in Los Angeles saying that he's got clients calling him frantically looking for leases, calling developers, asking about vacancies, see if we can figure out some sort of short-term lease or short-term rentals to house people. One of my number one comments from this whole thing that I wanted to bring up to you guys today is the displacement. You're talking about thousands of people. There's over 1,000 structures that have been completely destroyed. There's no burned wall or roofs kind of. It's gone. Yeah. It's 100% gone. That's thousands of people.
All your personal belongings. Imagine how much you put into it. I mean, I was just talking with Tanya. I would tell her, we have to have this fire/water safe that can protect you from not just the fire, but from water also, right? Because when they're coming out, turning those things off, a lot of times you get a fire protective safe, but then all the documents that you have in there are wet and they're no good. So
the timeliness of this is a little bit curious to me, not curious. Sorry, there's something timely that happened in my life. I had a conversation with a friend of mine who works at a restoration, like a fire and flood restoration place, and that was one of the main topics we talked about. Was like, hey, the fire's one thing, but then when the fire department shows up and they completely wet your house, anything that's not burned is going to get ruined. And the electronic stuff, documents, papers, photos, even furniture. I mean, if it's not lost from one thing, it's typically lost from the other. And the calculated cost of those things gets astronomical very quickly.
Yeah. One of the things that I saw that, I think is going to be an obstacle down the road is the permitting and the rebuilding phase. Because, I mean, we already know how long it takes for, the local municipalities to be able to dish out permits or even work on any permits. So on top of the permits that they're already probably backed up on, now they're going to get an influx of a whole bunch of other, new permits, new rebuilding plants. And that in itself is going to cause another bottleneck that down the line is going to cause a huge delay in anything getting built, from one year to another. So there's going to be a huge time that is going to, take time to just get all that in line before anything hits the ground and start putting bricks down.
This is truthfully a sad story.
Yeah, no, it's...
when Mauricio put it right here from the agency of just finding vacancies, short-term rentals, that in itself is going to be very difficult. And what people don't understand, that us being in the real estate and the mortgage industry, it affects us all.
Yeah.
We're all affected. But yes, of course, it's the people that live there are way more affected.
Yeah.
Their lives are gone. Their memories are gone. There's some people that don't have insurance. Like, how are they going to even rebuild?
They won't. I mean, that's the saddest part about this is whether they were canceled or they chose to cancel it, whether their policy was non-renewed. I'll put it that way to be correct. Whether their policy was non-renewed or they chose not to pay their policy or renewed on their own, there's a complete loss. So unless you have the cash to rebuild and the time to wait, you could be displaced for years. Let's be honest. This is not a break-fix situation.
Yeah.
I broke my phone screen. It'll be ready for you to pick up tomorrow. Yeah. That's not it. We're talking about, like Brian's point, especially in these neighborhoods where like the entire neighborhood is demolished. That's going to take a long time. Not only do the cleanup, but then to do the prep work, to then do the rebuild work. And then I don't even know what percentage of homeowners are going to be able to go back to the place that they lived.
Yeah.
That's truly devastating. And some of these people have lived I'll say their entire life, but 30 years, 40, I'm hearing all these stories, and people they've raised their kids there. They're hoping to have their grandkids eventually be there. And it's like, that's so just different. Vanished in a moment.
Let me tell you guys about this one, where it says here on the article, California's wild season typically begins in June or July and runs through October. According to Western Fire Chiefs Association, the season can begin earlier and end later due to decrease in rainfall as a result of climate change. What do you guys think about that?
So there was a study done by some forest company that takes stats here in the California, and they mentioned that 95% of the wildfires here in California are actually caused by men. They're not a natural disaster. They're not something that occurs like a hurricane, like a tornado. They're man-made issues that happen due to faulty equipment, due to misappropriation of, funds that need to go to things that need to get fixed. So all that plays a part. And down the line, we knew that this was something that needed to get, looked at or have more, funding so that we could be prepared for a situation like this, because we know this happens every so often here in California.
Yeah.
Part of this whole story is the forest management issue.
Yeah.
And I don't mean just forest is like what you think about, like the pine trees and the hills up in Julian and all this, but actual like the management of territories. And now I have friends that live in the East County of San Diego. For those of you unfamiliar, there's a lot of like ranch land out there, rolling hills, dry brush, and it is definitely a problem. And you'll see goats on the hills eating shrub and eating vegetation down because you have to do some sort of perimeter around your property.
Yeah.
I have a friend. Steve, specifically, Steve, he comes from the home inspection industry, and he's retired many years now. But around his house, he has a multi-yard wide burn path that he's carved around his house, and he has rockscape and concrete nearest to the house specifically for prevention. Now, the thing is, will everyone do that? No. Is that advised? Well, yes. Does everyone like the way it looks? No. So there's these calculated risks people are going to take in that. Now, in the case of some of the LA burning, you see a lot of dense neighborhoods right there in the hills, and these hills are not maintained with that type of distance between the home and the agriculture.
Yeah.
But I don't think this is a single issue where you can just point, it's this or it's that. It's a number of things. And I think what I'm already seeing, though, is people are just trying to blame one thing or another. Yeah. Let's blame the politicians for this. Let's blame the climate for that. Let's blame the arsonists for that. And there's a combination of things at work.
Yeah.
You're blaming the fire chief for this and the mayor for that. And there's more than one failure here. Let's be super honest. There's way more than one failure that's happened in this situation.
Yeah. I don't know. I kind of agree with you, but I disagree in some sense, right? But I mean, it's just a touchy subject. Just to see again, over 1,000 families displaced is just not fun. 10 fatalities with this whole insurance thing. It's like, how do we move forward? How do we, prevent these things from happening? How do we build that wall, right, to prevent these things? How do we get water to these places? Because people couldn't do their jobs out there, right? There was no water.
Again,
you go to a fire hydrant, there's no water. So it's like these things were spoken about, my understanding, to our governor 4 years ago as a preventative, and nothing happened. Instead we did other things with the funds that we have.
It seems to me like this exact situation is the reason we talk about preventative measures. This is the situation that gets argued about in policy land of why we need to have money for this, money for that, procedures for this, and a protocol for that. Yeah. And this now being the outcome of that is exactly what was intended, whether you agree with the intention or not, or the way you get to the intention. This is exactly the situation that they were advocating they're trying to avoid. Yeah. And now it's upon us.
And I guess you can't, like you said, there's multiple, aspects that are, to blame for all this to happen, but you can't also blame 100% the insurance companies, because they also pleaded their case that they know this is the issue that we're having. We can't reinsure because of the cost to rebuild. Yeah. So I understand also that the government over here on this side is trying to protect current policy holders, because they don't want their insurance to get spiked up higher the next following time that they need to renew it. But at the same time, it's like, well, a business needs to profit in order for it to keep, doing business. And it feels like, hey, the insurance company had no choice but to be like, hey, well, we're at a loss. We can't just continue to lose. Well, I'd rather pull
exactly.
out.
The way,
it's business. I mean,
yeah. I guess the other way, the best example that I heard was, from PVD was with he got canceled for his insurance for his yacht, right?
Yeah.
Because he's not a captain. If he was a captain, obviously an insurance companies want to insure a captain because you have experience, whereas he doesn't. So we don't want to insure you
because you're a liability.
Right. Exactly. So the way I think the companies also look at in California is as the government, right? Because we're not building the trenches because we're in an urban area.
Yeah.
Right. When you're in a rural, like your friend, he's rural. He knows what he's getting himself into. Yeah. So I want to safeguard my home. I'm going to put protection. Right. But when you're in an urban area, you rely on your government to make sure that they built these homes to fire standards, or there's no fire brush.
The community's sustained enough to be able
knowing that, hey, climate will bring winds and stuff like that. There's things that are preventative. The way I'm looking at it is insurance companies understand that, because they're going to go and look and see, where am I going to insure? Why would I want to insure there if the government or the city hasn't really protected anything?
It's like they're shooting themselves in the foot. They know that it's just a matter of time before I get
exactly. Maybe if the government put these protective measures,
it makes it more appealing for me to insure.
It'd be a lot different for an insurer,
And that's baked in, so you think that's like baked into a big pot of stew of the problem. Because I know last year we talked about the pricing of insurance as well, and one of the issues is that they're chasing the replacement costs. Yeah. So the premiums that the premium increases they're allowed to put upon a policyholder are lower than the rate of the cost of labor and replacement materials to rebuild the thing they're insuring.
Yeah.
And so then you have the insurance commissioner as part of that too. Again, that's what I'm saying. It's all baked in, because it's you go down one thought path and there's 5 or 6 or 7 or 8 or 9 or 10 different things you're going to bump into as problematic in the problem, whether you go this way, to the right, down the center, above or below. No matter which way you argue this thing, there's problems in a variety of variables that are going to have to be addressed because of this. There's no way out of getting through this without addressing these materially in black and white.
And it's not like these houses are in communities where houses are like $200,000 or $400,000. They're multi-million-dollar houses. Yeah. And like the cheapest one is probably around $1 million.
Well, they were saying the average was like 2.7.
And I know that's what I'm saying. Like, and that's like on the low end. So I mean, you're talking about multi-million losses here.
Yeah. There's. I think what we should expect and what people watching this should expect is that, number one, if you are still insured and you have fire protection for your house, review your policy. So I wrote down some takeaways here. So to give some people some like guidance or some advice. So number one, review your current policy that you have right now and see what kind of coverage and replacement coverage you have. Number 2, if you find that you're lacking any of those things, call your agent right away. Tell them, hey, I reviewed my policy, explain this to me, or is there a gap here? It sounds like there is, looks like there is. Ask good questions, and then make qualified choices, okay? This seems very elementary. I understand. I am going to that granular level because sometimes it's just a matter of stopping your life long enough to look at what you actually have and then call out what's missing and then plug it in and fix it.
Yeah, no, great advice.
And even, I mean, here for San Diego, we're not too far away from Los Angeles. We ourselves have experienced plenty of fires in this area. So don't wait until the fire's in your backyard to then start, making a move. It's right now to prepare into June, July, when our fire seasons are around the corner. Make that move right now, or take that time to fix that.
I want to make sure that I let everybody know, in case you don't know, in the zip code we're sitting in, this zip code as a zip code is next to agriculture and has been canceled by some insurance carriers because they go, oh, you're within 5 miles of the rolling hills. Not 100 yards, not 100 feet, like 5 miles. And so entire carriers have lifted themselves out of certain zip codes specifically because of that.
Yeah, 100%.
No, thank you, Andy, for giving that great advice. I mean, again, it's just advice is prepare yourself, right? Prepare yourself with having even a safe to protect your birth certificate. Very important documents there. The other thing is we all have some jewelry. We have our wedding rings that sometimes we don't wear, right? I don't have mine, but it's there. So ensure those things. Now is the time to just not learn through going through the experience, but just learn by going through it, and so put yourself there and just imagine. Again, devastating to see everything that's going on. I just went in there and Googled just current images, and I'm telling you, it is not a pretty sight.
From like one day to another. It's ridiculous.
Yeah, so great advice. I think we should end it there, is just be prepared. And thank you, Andy, for sharing that. That's actually really good information. Talk to your insurance company right away.
Yeah, and just keep your eyes open for what this changes in the commercial space as well as residential space, and insurance connected to both, because there are businesses that were lost as well as homes. And there's going to be broad changes that are not just for Los Angeles County, but probably California at large. Yeah. So we're going to, unfortunately, probably have to come back to this one again at whatever point it's relevant. But I don't think that this story is over. It's just over. It's just over for us today.
And again, our prayers go to you guys.
All right, next, guys. Again, I was hoping brand new set design, brand new year. Hey, let's talk about some cool stuff in real estate. Well, this puts a damper on it.
Well, there's more.
Brian informed me, because I had not heard of this happening. I spent a good bulk of the vacation in bed with the flu. Yeah. I didn't hear about this and had not known this was going on. But San Diego homeowners are stuck with massive debt from incomplete ADU projects. Okay, there are nearly 100 San Diego County homeowners who say a local ADU contractor took out enormous construction loans under each of their names for work that in most cases was never even started. Okay.
And I'd like to share the name. The CEO of Multitasker, Jose Frosto, has not responded to repeated calls.
For me, it sucks, because these are the types of, situations that put a damper on the business that we carry on every day. And it's because the situations like this that we get scrutinized, and we know there's distrust in the work that we do. Yeah. When in reality, there's going to be, I'm sure there's a reasoning behind everything that happened, but, you have to be, upfront with everything that's going on, especially in the multitude of, the business that you're carrying out, because you're not just affecting one person, you're affecting multiple people, and not just in that given moment, but throughout their whole life. They don't know what to do now. They're stuck with this huge issue that is like, what am I supposed to do now?
Yeah. So this is. I'm glad you said it that way. This is a black eye. This is a black eye on contractors. It's a black eye on ADUs. And here's the unfortunate part. We have a friend of ours who is a great contractor and does fantastic ADU work. This is now going to put all those other guys that do great work under the microscope and even further scrutiny, where in some cases it's not justified. Absolutely is it justified in this situation? Yeah. Some of these people quoted here were like, oh yeah, I looked at the online reviews, they look great, everything made sense. Because again, the push for allowing ADUs in San Diego was to accomplish several things: increasing housing opportunities, allow you to build more easily on the property that you already own, and do it at a price point that is more affordable for people who can't go buy a house.
Correct.
And can live there. And in one case that was cited here was to bring in an elderly parent to have caretaking. Yeah. And now that's not happening. So, I want to scrape away the idea that ADUs are all just about money all the time. Sometimes they're not. Sometimes it's because you got to bring someone in,
Life situations.
and they're going to get caretaking on your property.
But
where
it
you're
is,
also there.
but it is about money, right? The money
of
is
course
that you're
it
going to
is.
save, and you're going to bring somebody in. So as we know, the ADU is an accessory dwelling unit, and right now in California, because everything's so expensive, it just makes more sense to actually build something, because you have certain taxes that you won't have to pay, for getting a junior ADU or what have you. But I mean, this is just bonkers to see this. When I saw this starting the new year, I'm like, oh my goodness, how do we start like this?
Yeah, this is bad.
Just so you know, it's all about doing your due diligence. When you're working with the contractor, never, ever give money up front. There's no need for that. So always protect yourself by asking the right people. Don't just settle for your neighbor that's going through experience. They may have a great experience, but you got to really look outside of that.
Yeah.
When I hired our friend new that's actually doing our ADU, I went through 11 contractors before I found that one, and it was through asking the right questions. And then that contractor would give you another set of questions that they were asking. You're like, I never thought about that. But now you'll add those questions to the next contractor, and that just helps you make the best decision possible.
Yeah.
For instance, contractors work with draws, Andy.
Yep.
When you get a loan, in this case, they put the loans under Jose Frausto, not themselves. He was getting paid, not the homeowner, and then paid. He got the money from the loans up front.
So it actually says that the contractor took out more than $900,000 under the owner's name.
Correct.
Name.
It's the owners,
so
but
the
he's
owner's
the
name,
payee.
but
He
the fund-
gets
yeah,
the
yeah,
fund.
yeah. Just wanted to
So the
clarify
funds
that.
go to him. You never do that. The funds go to you.
So can we quickly jump to what are some best pieces of advice for people who are still looking to build an ADU? I wrote a couple down. Can I share them?
Yeah,
And you
please do.
Because I'm sharing it from the I'll say the theory side. I want you to share it from the firsthand account side. So ready? Here's my list. Number 1, reviews. Yes, I know these people looked at his reviews too, but the reviews are part of the story. Here's why I said it's number 1. Number 1, number 2. Number 1 is review. Number 2, past client testimonials.
Yeah.
If you can talk to a past client and a past customer, get a chance to talk to them, give them a call, ask them a couple questions about their experience, the time, the friendliness, the accessibility to the people. Number 3, escrow funds or fund control. Make sure you're dispersing funds as work is completed. Number 4, visit the projects that they've completed. If you can find a project that they've completed and you can roll by that place, get out your car, go check the craftsmanship, the workmanship. You can see if things are to code as you know them. Go check it out. And then my other thing here was know your foreman. Being able to stay in contact with the people that are physically on site at your property doing the work. That is something that I think, again, that's just me shouting from the sidelines.
No, that's great.
I think that is a good way to always have contact with them and be alert and aware in case something changes or they need to notify you of something or you need to notify them of something.
Yeah.
And for good measure, I mean, here in California, the law states that it limits the down payment for home improvement contracts to 10% or $1,000, whichever is less of the scope of work. So you never have to actually give a huge lump sum of money to the contractor to begin the work. So that's your safeguards, your safe rails to be able to know that to empower. So if a contractor asks you, hey, I need this much down, you can use this information to say, hey, no, I can give you 1,000 or 10%, depending on what the sum of the work is going to be. So
And this is a law.
Yeah, this is a law. And then this is a California law. And then just in general law, contractor to collect. So it's against the law for a contractor to collect money for work that is not finished, materials that is not delivered. A down payment cannot exceed 1,000 or 10% of the contract price. So this is a law. Like right here, you are now protected. But then again, things do happen. But if you know this up front, you are, empowered to know that, hey, I don't need to give you that money by law. I'm protected. Here's what you can get.
Yeah. And, it was just like with me when I did their projects. Most of them asked me for money up front. I'm like, no, I'm working because I obtained a loan. The funds go to our account. I have to pay out based on the work that's been done. So all the work that the contractor does, you want to find a contractor that has an account, that has the capital be able to do the work, because then you're going to reimburse them for that. And what's cool about it, like in the ADU that we're building, when the contractor wants a draw, they call them draws. Okay. So when they want to draw, they'll put, I want $25,000. Well, that doesn't mean you have to give them $25,000. An inspector will go out there and say, well, what do you want for $25,000? Oh, I just framed. I paid for the material on this. We put electrical. So the inspector goes out there to reassure the homeowner or the investor that work has been done. And based on their work, if it's been done 100%, they'll give him 25. If he's done more than he stated, they'll even give him more.
Yeah,
that's the beauty of it. Or sometimes they'll give him less.
And and working with with investors and other homeowners that want to build ADUs, they always ask, "Hey, well, where can I get the money to start?" And right off the bat, you let them know, "Hey, well, the good thing is that we work in draws. It protects you and it protects the contractor. How comfortable do you feel giving somebody hundreds of thousands of dollars and take their word for it that they're going to complete the work? Why don't you protect yourself? You pay as they work, and everybody's protected. Nobody's taking away thousands of money, and you actually get to be part of everything that's happening along the path."
Yeah. And in this case, guys, I don't know what the recourse is going to be. There's probably only so far that the state protection can offer people who have had a loss. And I'll also say this, there's going to be a long timeline before any recuperation of said loss is received.
Yeah.
This is not going again, this isn't an overnight switch or a light switch. You're going to get a result overnight. This is going to probably go to court. It's going to probably go to criminal court and
Class action.
Depending on whatever they can. I don't even know. The fund that is in place to help protect people in this situation has a limit to it. Yeah. So many of these people were giving more money well beyond what the limit is. Yeah. And they may just be out.
Yeah, and I believe it's $25,000 bond for contractors, and the way that it works is that's basically all you get per contractor. If anything happens, $25,000. But now if multiple things happen at once from different clients, that $25,000 gets divided, and all these projects are upwards of $200,000, $300,000
split among claimants. Yeah. So that there's going to be limitation, and the recourse could be years in this.
Yeah.
I mean,
and here's the biggest problem. The problem is, these homeowners are paying the monthly payment for this.
They're making
if they don't make that payment, their house goes into foreclosure.
Yeah, right. Yeah, and it sucks. I mean, some lenders are working with homeowners to cancel outstanding debts, but there's only going to be a handful of people that are able to get out, modify it. But you signed it; it's yours. You're responsible for it. And unfortunately, until there's something that legally can be done, you're going to have to be.
You know what's crazy about this is, because
the whole thing.
Well, not only that, but these people are so unaware of what they're doing. They think everything that they're doing is fine. They had they had a gathering right before Thanksgiving.
Yes, I'm telling you.
So this is how is it that you're taking over $15 million and you're still I don't get it.
I understand delays, but when you fully just cut the cord and not answer at all, then okay, that's a huge issue. And I remember seeing that post. They were saying, hey, these people are going to be here. We have multiple people that have complained. No projects completed. We need answers. Community, please come out and ask. They're going to be here. It was in November or something.
It's crazy. Yeah.
So as it is right now, license has been suspended. And the Contractor State Licensing Board is reviewing 11 complaints, but there's apparently 100 different homeowners affected. And now that it's become more of a headline, or at least in local news, there's definitely likely to be way
more that are going to come out of the woodwork.
Way more, absolutely.
Many.
Because again, in order for kind of anybody to get anything, it's going to take as many people as possible to be sharing their story and putting their hat in the ring. Go, you know what? Yeah, I'm part of this too. Well, and if I stand a chance of getting anything, I need to participate.
Because a lot of people also probably just took the quiet route and said, hey, I got F. I don't want to tell nobody. Shoot, now I got to deal with this. And there's so many of those quiet self-editing as well.
These guys are in our own backyard. We went to one of their workshops. Everything sounded good. As an experienced investor, ADU, it sounded good. I was even thinking what their loan terms, right? They were saying they're going to fund you 100% of the loan terms and you have no payments until your project's done, or you have no payments for 12 months. It sounded too good to be true, right? And usually you can feel that, right? So good thing is I never got into it, nor would I ever put a loan, the funds going to that person. No. Again, and this stuff that I've learned, it took time. It took experience for me helping other people to realize that's not the way to do it. There's a better way.
Yeah, and when they say there were one-stop shop for everything, for me, that's a red flag because jack of all trades, master of none.
That's a good one.
Any final thoughts on this one, guys?
I think that's
sucks.
That sucks. Huh?
Yeah,
this sucks.
My heart does go out to the people who...
This is in my own backyard. This sucks.
And I hope that people that need to be brought to responsibility, full force
held to account.
honestly, because the people that put their hearts and their livelihood onto this is just horrible that they have to live with it.
I'm willing to go out on a limb and say in most cases the people who are doing this, it's their primary home, and it's their only one. It's not, I have 10 and I'm doing 10 with this.
I could take a loss
person. I'm sure that the majority of these 100 people or 100 plus, it's their primary residence. It's the only residence they have, and they're trying to do a project.
Correct, and they don't know any better. So the person that they listen to is going to be a close friend or somebody that went through it.
Yeah.
And out of these 100 people, I'm sure that maybe the other 30, 40 people did get what they they requested, but that's just the way how we get referrals out there, and then we'll probably take advantage of the situation.
Yeah, this one definitely is going to have some sort of outcome and recourse. Don't know what it will be and when it is, but I also would not. I would also expect that it might have some sort of policy change as well down the line in the future, whether it's year 2, 3, 4, however many years down the line. There's probably going to be some policy change too.
If anything, I could add here at the end is, listen, when you guys talk to your contractors, you guys are building these. Make sure that the contractor works with draws. If they don't work with draws, don't work with them. That's it. And what I mean by that is you can ask us in the questions. I'll be more than happy to answer that. But do not ever give money up front.
And if they do ask for it, say later.
Just later. Yeah. I'm going.
Not my guy.
Make sure they have capital.
All right. So
plenty of good contractors out there.
Yeah.
We're going to move on to the next article today, guys. This is also, again, from Housingwire. Most prospective buyers want turnkey homes despite higher prices. So in a survey, and it's a MLS Market Intelligence, Bright MLS Market Intelligence survey. This was across like Delaware, Maryland, New Jersey, Pennsylvania, Virginia, West Virginia, and District of Columbia. Now, this isn't our backyard, but it's a large enough of a survey sample that it's worth talking about, and we can relate to some local sentiment, if you will. Okay. So most survey respondents were willing to compromise on size and location to avoid high price. So does that then mean that just price is the end all be all for everybody all the time?
No. I mean, it does kind of discuss it like that, but I don't think so. I think most people are looking, they understand right now is, instead of me going into a property and putting X amount, let me use you an example. I had a client that's looking in Riverside, right? He was okay with purchasing a home for $550,000. No, it was $650,000, but it needed at least $80,000 worth of work for it to be to his, standard. Well, down the street, there's a brand new home going for $50,000 more.
Huh.
So he's like, skip that. They didn't take my offer. They're lost. Let me just go to the new builder. Mm-hmm. And they have incentives that they can provide, right?
Yeah.
So I think people are just saying, like, I'd rather pay a little more and just make sure that I go in there and I don't have to worry about the paint, the this, the that, because it's just money. Money is expensive right now.
So is the short way of saying that it's like just the convenience will win?
That absolutely.
Yeah, always.
Okay. 100%. And then in this case, the byproduct of that also means that it's a resold house might not stand as much of a chance against this behavior set or this attitude as the brand new one, where maybe you, with the developer, can still pick the paint color, the type of counter, the flooring you want because they're going to just customize it to you.
Because if you think about it, Andy, for every $10,000, I want to simplify, for every $10,000, it's about a $65 to $75 difference in payment. Right. But if you borrow on a credit card, $10,000, what would that payment be with the average interest rate right now being 22%?
Yeah, like hundreds of dollars a month.
You see what I'm saying?
Yeah.
So, and then it's not even a tax write-off. This way, all your interest is a tax write-off. So I think the smartest way to go is just pay a little more for that house that you have to, put less money into.
Some insights that I like that the article shared was that also that buyers took into consideration that renovation costs are also higher than what they used to be. Therefore, those $50,000-$80,000 that they'd have to come out of pocket, and then it's out. They rather finance that into their their monthly payment, which is a fraction of what they're dishing out, and pay that over time, and it makes more sense because they keep that cash in their pocket to do life, and they don't have to go fork it out after they did their down payment, their closing costs, and then now they're actually house poor, but they have a beautiful house.
Yeah.
But this way, they put it on the house, they make their payment monthly, and they get everything that they want while still be able to keep as much cash in there.
And you go in there now.
Yeah, and you go in there.
Yeah.
Now, you don't have to wait. You don't have to do the renovations. Hey, half of my house is working, or hey, we still have to wait for us to move in because things aren't ready. So at least you have that peace of mind.
Because then, because you also have that displacement, right? Wherever you're currently renting, you probably have to extend it, and sometimes that lease is going to be due. So there's a lot of things that factor in. Mm-hmm. And so if you don't have that luxury of being on a month-to-month where you're current renter, then you may just want to buy that home because now, hey, it's already done. It's turnkey. I'm ready to go. Just move in my furniture and I'm good.
And I think we could all agree that convenience, everybody will pay for convenience. Yeah. If you have the ability, like the choice to.
Let's just ask Amazon.
Well,
thank you.
There's definitely that part of it, and there is just the simple math size. Like, hey, you can get into what you can afford. Yeah. If you can't afford the place that's $50,000 or $100,000 more, well, you're not getting it anyways. Yeah. So you have to just lean into the one that you can afford first, and then you get with it whatever comes along with it. That may mean it's turnkey, may mean it's not. So I think there is a little bit of like a flexibility that's required for people that are, let's say, on the edge of being able to afford or not afford. You're kind of just cornered into there need to be some flexibility. There's not another choice.
Yeah, if you don't have all those financial compensating factors to be able to, pay whatever you want or, have the price point you want, then you're going to have to, come down to whatever, is your reality.
Yeah. And I mean, most of the questions, Andy, when we're doing loans, and I'm glad people are becoming smarter.
Yes.
Getting smarter with this, and so they're understanding leverage and, everything that we do is, surrounded by leverage. The more leverage you can get, the better terms and conditions you'll obtain. So in this case, people are just getting smarter, and so them looking at this side of things and just wanting to get in there, it's like people don't want to do a lot more work right now. The DIY is so famous and popular. It's great. But like Brian brought up, things are a lot more expensive. Things are getting way more expensive. That is just best. Hey, let's just be there already and let's just go in turnkey. Somebody else already did the work. I don't want to do that.
And truthfully, I think the DIY was mostly like a season when we were in COVID, where people were all at home and wanted to do everything themselves. They were stuck seeing things at home. So I understand that at that moment, people wanted to do everything themselves. But now you come back to, what's reality. Everybody's out doing life. You got your family. You got this. You got your job. You don't want to go home and start building stuff if you already had a full 8 hours of work, unless that's your passion. There's people out there that are like that, but most of us aren't.
Well, and if you're handy, I can see people doing that. I think there's a contingency of this, I think too, which is people just being like, hey, I'm paying $650,000. I don't want to work on anything.
Exactly.
$650,000. I want to go in that place and it's done. Why am I going to go in and be like
much so that I can put more into it?
And then I think it gets worse as you get more expensive. At $900 million, $1.25 million, I definitely don't want to be like, $1.25 million, and I got to dump $100,000 into it. No, thanks.
I'm in $1 million now. Shoot, like
right now, let's not forget, most people are working 2 jobs.
Yeah. On top of that,
go there. Go ahead. Go ahead. Say it.
All these things have have a huge impact in all of this. So I believe this. This shouldn't just be, in those states. It goes on right here in California. We see the same thing.
Yeah. Okay. All right. Well, I think that obviously there's some trade-offs people are willing to make, some trade-offs that they're not willing to make. It's always a personal situation, a personal decision. One of the things kind of connected and kind of related to this is that in this year, we're going to start sharing more real case studies of buyers and people refinancing that you guys are talking about on kind of both ends of the conversation of, well, why are you renovating your house? What are you doing? Or why did you buy a turnkey house? So we have more to come on this kind of as its own little category as Brian and Memo share more about case studies of people who are getting into homes and the specificity of what they did, where they bought, what they're doing, and the why and the how, so that all of you out there who are aspiring homeowners can get this outcome that you're looking for.
Yeah. No, perfect.
Yep. Good job, guys. So let's close out today with the mortgage rates.
Can I read the first sentence?
Please. Go for it.
December jobs data expected to cool, but how will the Fed officials respond at their next meeting? Oh boy, last Friday were we in for a ringer.
This is an interesting article because what we
read it and laughed.
What we had been talking about months ago in August of 2024 was mortgage rates are getting a head start before the Fed starts cutting rates. And August was like the lows of the lows.
We're
for
back.
Like all of 2023, all of 2024. August 24 was the lowest rates in that 24-month cycle. Yeah. And then they just kept going up. September they went up. October they went up again. November they stayed up. They took a little bit of a breather right before Christmas, and then boom, December they remained elevated despite the Federal Reserve dropping their interest rate in consecutive meetings.
But Will brought up a good point the other day about employment and how important that is, because all the taxes that they're collecting from, employment is going towards paying some of our debt. And what happens if employment comes down? Will brought a great point. Who's paying for the debt? Yeah. Now it's even harder to pay.
The question is,
they have to pay on unemployment too, right?
and then that's another charge that gets added onto the debt.
Yeah.
So it's like a big intertwined circle of if I ease up over here, you're gonna have it harder over here. So it's literally like teeter-totting.
So here's
when is it gonna stop?
So here's where I want to go, guys. So we in the fall of 2024, and I'll say the quarter four. Okay, so October, November, December. A lot of our conversations were like, okay, cool. Well, everyone is expecting lower mortgage rates in 2025. Now we're not there. Now it doesn't look like we're going to be there, and it looks like the Fed is going to pause on their rate cuts at their next meeting, and there's a very low chance that they're going to do a rate cut in the March meeting. So now what do we make? I mean, we're just completely, I'll say, at the mercy of the rate markets, but they don't seem to be trending in the same direction, and that's a problem.
So I think what I was going to say to that is that I think that gives us runway for the market to kind of work on its own, because if we see that once they're bringing down rates, it's not bringing mortgage rates down, then maybe holding is going to put off a different effect to be able to at least slowly rates come down into.
But if they don't and they remain elevated, that's going to put price pressure on homes. And then you will see price pressure become the reason why people do price reductions.
Yeah.
So if we get back up to this 7.25, and the further we get away from 6, the more problematic it becomes on pricing.
Yeah. I mean, I like to start off first again. 2025 has been a shit year to start.
we can do it.
We got fires. We got this ADU shit,
Oh my
God. Now we have the worst affordability. We started with the worst affordability ever.
Right.
That's been 2025 to start off the year.
Yeah.
Here's the price compression that's going to happen. We got to think about it. Homeowners look at their home as, my home's worth $10 million. It's not. It's worth what the buyer's willing to pay.
Yep.
Okay. The difference between a builder and the owner is that the builder treats their home as a commodity. So they give the best terms and conditions to make sure that they entice the buyer to want to go in there by giving them, closing cost concessions, etc. Where homeowners are, no, I shouldn't be giving that. If they kind of looked at it also as a commodity, which it really is, I think things would be a lot different. You got to conform to the changing market. I know we're saying prices reductions and all this stuff. That's just because you priced it too high.
And I think it opens up an opportunity for people to put their reality lenses on and say, hey, the market wasn't what it was years ago. I'm emotionally attached to my house, like every homeowner is, because they're not investors, they're not have multiple houses. So for them, that house is everything that they own and it's worth a lot. But at the same time, it isn't.
Yeah.
So it's like the market's going to tell you what your house is.
The difference is when we got into a home to provide a roof for our families. We just didn't want to rent. We wanted to go in there because I've been a renter, and I put anything in there. If I painted it my way or if I did anything, that was at my expense. And when I left that unit or that property, I left it in better condition for that landlord, And so my whole ambition was, let me go and do these things and let it be for me. I wasn't looking at it when I bought back in 2000. I wasn't looking at it what's my appreciation and going this is going to be something that's going to leave. I didn't even realize those things until
I just want that
2023. I said oh damn, I bought my first house for $242 and now it's worth $575. This could be a business, right? This could be a good industry for me to get into. And that's what enticed me to want to get in there. But I never realized that. The beginning wasn't for that.
Right.
It was for something different. So, look at it right now. If we made equity now, that's a great thing. I recuperate all the monthly payments that I made throughout the years and some. That's a win already. In addition to all the tax write-offs and all, that's a win already.
Yeah.
This, what I kind of laugh about here is with the mortgage rates have been continued to rise since the Fed Reserve meeting on December 18. Why don't we go all the way to September? When they reduced it by 0.5%, that's when they should really go, because that's when it really started.
We had that uptick at the end of November, early December, and then...
Yeah. Well, and here's to all our other, people that we were dealing with and other friends, that were saying rates are going to go down. I'm just going to wait. I'm not going to refinance right now because rates are going to go down. It's way too late.
That ship sailed now.
Yeah,
it's gone.
That's just to tell us all that, the federal government has a lot of influence where rates go.
There's an old saying, the bird in the hand is worth two in the bush. Like what if you have right in front of you, that's better than not having two, right?
That's right.
And, I think sometimes we can just hold our breath a little too long and then the moment is gone. And in this case now, anyone who did not take advantage of that back in early to mid-August is going to have to now just be forced to wait.
Yeah.
And my opinion is that this title summarizes the problem super adequately. Mortgage rates above 7% are clouding the housing market outlook. And it's a great summary because this goes downstream into an inventory problem because we saw inventory get better when rates went down, and now it's going to get tighter because rates are up. I think it's going to negatively affect pricing if mortgage rates stay higher. Affordability now is bad again, or I'll say poor again. And now you have price sensitivity on the monthly payment side because rates are back in the 7 range, and 6 is more appetizing. All of this comes together in this whole new normal, which we've been telling people, kind of saying, not saying. Well, hey, look, they're going this new normal. It's not going to come back. You're not going to see 3% again. Don't hold your breath for 4%. They're getting everyone ready for a 6% interest rate world. And now we're at 7s though.
I think they killed all hope, and they kind of just said, okay, we gave you hope that we were going to go lower, but nah, never mind. We're just going to keep it at this. You guys, your hope's done. Like, don't even worry about it.
So here it is. The hope is every time they reduce the Fed funds rate, it's a hope to the community out there that doesn't understand what that really does. And here it is. The reason why it's that, because we're at a deficit of $36 trillion. $36 trillion, right? And so it's advantageous for our government to reduce that 0.25% because they also need to refinance that. And so that's how they save the money when they refinance. But that's not tacked on to the consumer. Yeah, it's great for you're going to see your 0.25% less on your credit card, on your car loans, but not mortgages. Mortgages is all to do with the 10-year treasury. You follow that. That follows also, how stocks are going to do.
Yeah. There's a lot of these are all interconnected.
Very.
Inflation, unemployment, the job opening and labor turnover survey. You're talking about average earnings. I mean, everything is interconnected. And then the Fed's decision as a result of their data is going to have a spillover effect. And right now what we're seeing is this spillover effect where what we thought was going to occur is not going to occur because another problem is bigger than the one they tried to solve.
That's correct.
So to try to squash inflation, there's another new problem, which is now there's stickiness of pricing. Now we have more debt than we had before. Now you have unaffordability. So we've created a new basket of problems while trying to solve the other problem, which still isn't solved. And I'm going to go to the mat with people on this one.
Yeah.
I am so sick and tired of hearing people on the news and TV saying inflation has gone down. That is incorrect. Inflation has slowed in its acceleration. It has not gone down.
Correct.
It has not gone down until you see a negative sign in front of the number and you see a negative in front of that handle. Until you see that, it has not gone down. It has only slowed.
Yeah, exactly. Just go to the store and buy groceries, buy anything. I was at the grocery store with Tanya, and I was just looking at a box of cereal. I'm like, oh my gosh, they're no longer at like 3 something. They're like $8 and change. I'm like,
yeah, that's a small box too. You look at that like family size, you're hitting 10.
Yeah, I mean, look, here's the thing.
Crazy.
This is the problem that affects
inflation's there.
This is the problem that affects everybody. So I'm certainly not sitting here in this seat going, oh well, I'm just barking about inflation because I'm angry about it and I policy wise have a bone to pick. No, it affects everybody. It affects everybody that we know. And the issue is that if we continue to like paint over the problem and we never actually get to the root issue of the problem, it will never get fixed. Yeah. And then what's going to happen is unless people can dig themselves out of this hole by making more money, get a better job, get a second job, or if you have a second job, get a third job, pay down your debt, do a combination of all those things, you're constantly going to be chasing the price normalization. That is what this is. I'm not going to sit here and pretend like this is anything else other than price normalization because it's not. There's no plan on the horizon. There's been no plan that has been shared with us about how we're going to get prices back to where they were just a couple short years ago. There's no plan to do that.
So what do we do for mortgage rates to come down?
We have to have rampant unemployment.
Well,
that's the answer.
That's exactly what the article said.
You have to have rampant unemployment, which will curb spending, and then the hope is that by curbing spending, that will bring prices back into order. And then if we have more inventory of unsold things, then the prices can be marked down at the store. It's just this like second, third, fourth order effects kind of thing, which there's no direct correlation that it's going to help right now. It's all got this long on ramp and this long time frame of being able to be fixed,
chasing,
and it's not getting solved. This is what was supposed to have happened by increasing the Fed funds rate from March of 22 all the way until 24. This is supposed to be what happened over that 20-month span of them increasing rates. Was to quell and calm down spending, but it has not done it by any stretch of the imagination where they wanted it to be.
Just feels like it's a water pipe bursting everywhere, and whenever you try to fix one place, it just bursts out another place.
Yeah, pretty much.
It's like,
I mean,
you can never get to solve the problem because it's always coming out through one way.
I'm clearly all amped up about this.
Yeah, no.
Because it's a problem.
Not at all.
And yeah, no, it is. And it's a problem, and I don't mind that I'm, demonstrating my frustration because I know that my external demonstration of this is how a lot of people feel right now.
Oh, 100%.
This is how a lot of people feel right now. I don't have any comfort going by the gas station and going, oh, instead of $5.50, it's $5.25. Oh, that's great.
Unless you go to
I'm not calling nobody and texting nobody like, oh, I'm so excited. Gas is down 25%. I don't feel like that at all.
Yeah.
Why isn't it $3.50?
Off of L and Third Avenue.
Oh my God. Okay, fine.
Country Club. There's a
Yeah.
359.
I get
Guess
it.
what, guys?
Don't tell nobody.
My point is, I'm having an external reaction I'm sharing with you and everyone watching this that is shared by a lot of people internally.
Of
and
course.
they're privately and silently struggling because here's what happens. The people who are your past clients that are having this problem privately are calling and emailing, and they need the house to come to the rescue by pulling money out or consolidating debt or something like that because we're doing it.
We're all
and so
going through it.
we see this firsthand here in the office.
Well, and then, when you said about unemployment and how people continuously have multiple jobs, it sucks because we're just chasing affordability. And by them trying to get another job to just keep up with the regular everyday expenses, it's adding more fuel to the fire because there's more people getting jobs, even though it's the same person holding the multiple jobs, but it's still one person that's working all three of those jobs.
Yeah.
So it's at the same time, it's dude, where's all this coming from? But at the same time, they need to work those two jobs to be able to just survive.
So what people should expect is elevated mortgage rates higher for longer. That's just it.
That's it.
I want to come here and say something better, but I can't. If I could say something better, it just wouldn't be true. So we're going to have higher elevated mortgage rates for a little bit here. It could be the entire first quarter. It could be until the unemployment rate spikes even higher than what it is now. I think it went from 4.2 to 4.1, whatever.
And that changed rates today drastically.
That's a nominal change.
0.5%.
But here's the thing, it has to go up way higher, which means there has to be a lot more pain through hundreds of thousands, millions of households on the unemployment side before then we can see some sort of monetary effect that's actually going to be beneficial long term.
Yeah, I hear you.
It has to get worse before it gets better.
Our deficit even greater.
Well, it goes back to what I was saying earlier, you guys. It has to get worse before it gets better.
Over there.
No, I get it, but it's just going to be a hard Band-Aid to put on if that's the case that if that happens.
Look, man, no one wants to face the music. They just don't. Let's just be honest. No one wants to face the music. No one wants to be the bad guy. No one wants to say the truth because it sounds inconvenient and it's hard. But it has to happen. If we don't address these things and don't get it fixed, we're going to continue having this conversation, which I'm tired of.
We've been saying this.
It's going to be hurting people.
Plus.
Well, yeah, but at some point we have to see the other side of this, and it has to be at the policy level and it has to be on the market level. Yeah. It has to be on both sides. So, all right, that's it. I have nothing else to say about that. Favorite part of the show, Memo, go.
My favorite part of the show is that people are paying more to get into convenience. I think that's very smart for people to do. Finance it. It's a 30-year fix. It's a tax write-off. Take advantage of that, especially if you're working two jobs, you're making more income. It just makes more sense. Don't put in a credit card that's just going to put you in that position where you just feel like you're not paying it off, right? What's the average? How many years does it take a person to pay off I think I read a $10,000 or $13,000 credit card? It was 13, 15 years.
It was in the teens, yes. If you pay the minimum payment, whatever, it's ridiculous.
It's crazy. Yep. Yeah, don't get into it. Get away from that right now.
Yeah. Brian, favorite part of the show?
Definitely not the information that we discussed, but it's nice that we were able to have those conversations and be upfront and honest about what's really happening and not just come up here and sugarcoat everything. And then also that we're back. We're here. Happy New Year.
Yeah.
2025.
Exactly. Happy New Year.
All right. Well, my favorite part of the show is being back again. I like being in the new set. We'll see how this works out. See how people react. See what kind of feedback we get. I like having a fresh look, turning a new page on the new year. My favorite article today is also my least favorite thing that's happening. It's the fires in LA.
I know.
And here's why. I kind of have an optimistic thing I was thinking about as we're talking today. I am hoping that cooler heads can prevail and that there will be some positive policy change that allows the insurance carriers who left California to come back. This will not be the last time we see something like this happen. Maybe, I hope it's not at the same magnitude. I really hope it isn't. There's going to be more fires in California. There just are. But if we can solve a policy problem with the insurance carriers now as a result of this and entice them to come back to California, I'm hoping that homeowners can have more choices and more options. And here's my little caveat, that it won't be a socialized solution. It should not be a state-controlled government socialized solution. It needs to be the open market. And I think that this would be great cause for that conversation to be reopened again.
Nice.
Yeah.
Smart Cities 2028.
Oh, God. Why do you have to say that?
That's what they said, right?
Okay. Memo, Brian, thank you guys for a great show. Everyone, thank you for tuning in. Thank you for watching. Be sure to subscribe to the channel if you're not yet subscribed. Turn on notifications so you catch every episode and every new video that we put out. Thank you guys for watching. We will see you again next week.
Yep.
Bye, guys.
And we wish you the greatest new year.
Bye.
So if you enjoyed this video and got value from it, subscribe right here. And if you want to watch another video, click right here.